Welcome, ladies and gentlemen. The Beacon Gents are back. Weekly Beacon Roundtable on this beautiful Wednesday, as we call it, August 2nd. Hello to all of our Beacon founders out there and our friends from Beat the Banks. Let's do a quick thing, a little engagement in the chat. Tell us where you're from. Little Beat the Banks tradition. Hope everyone's doing well. Got myself, got Andrew, Jangle, and Gabe on the line today. A lot to talk about.
Happy Wednesday, everyone.
Yeah, happy to see everybody here. Also, I've been trying to make it a point to respond to everybody in the comments. So, drop a comment after the stream as well. If you have any questions or comments or want to say hi, and I'll make a point to get to them. So, it's pretty much a free Q&A, AMA in the comment section below. So,
free Q&A for Jangle. Wow, I like that. And he'll answer anything.
Yeah, anything. And
I'll find some weird
questions.
question to go ask you in the comments, like I always do.
The more disturbing and out of pocket, really, the better, to be honest.
I just want to know what is your hair care regimen?
Whenever I shampoo, I condition. And I probably do that about 3.5 times a week. Some say that's too much. I have been getting a lot of input from the No Poo gang, if you've heard of them. But maybe, they say I just haven't gotten over the hump. But if I don't wash my hair for a prolonged period of time, like most people's hair, it's not good. It's not a good situation. So I definitely haven't converted. But that is a niche online community upon which I lurk.
The No Poo community?
I believe that is a non-derogatory way to refer to that group.
Are they Asian in origin?
I don't know. Whatever they are, it can't be too similar to this because it doesn't work for me. So
I see.
It's interesting that you bring this up because for whatever reason, I always get more comments that my hair looks good when it's been a couple of days since I've washed it. And that just tells me because I don't that I should use hair gel more or something because people like it when there's grease in my hair. I don't know.
My prime time is 36 hours, 24 to 40 hours. That zone after the last wash, that's when I'm at peak performance.
All right, Chris, let's get into it here.
I guess NGMI if you're not 24 to 36 hours on the hair washing, whatever. That's why they make dry shampoo. All right. Well, to segue into things that aren't doing so good, let's talk about Curve. Monday. Was it Monday? Sunday. We let's kind of go over the timeline. So Sunday, there's an exploit on several pools on Curve due to a reentrancy bug based on pools that are compiled by a compiler language called Viper, which is a Python-facing smart contract language very similar to Solidity. Specific versions and older pools, which seemingly are an asset with pure ETH, native ETH, were targeted with this bug, roughly to the tune, I believe, of 62 million overall. The large chunk of that being on Curve. Exploits happen, right? These are terrible things. The problem is it sent the CRV token, which, by the way, that's the reward token, down the tube quickly.
On chain, at least.
On chain.
I mean,
yes.
if you talk about, the real issue is that one of the pools affected was CRVE, which was the vast majority of on-chain liquidity for CRV. So that was the reason for that death wick right there. But yeah, Chris, I'll get back to you. Just wanted to.
Oh no, you're fine.
Mention that part.
So the attacker for CRV ETH has taken the funds, put it into cold storage, and is trying to negotiate with Curve. There are other hackers to other protocols, such as Alchemix, Alchemix, JPEG'd, and a couple others that have been sleuthed. And in fact, one of them got front run by a white hat and had all of that ETH sent back to Curve, roughly 5 million, which was fantastic. The white hats have come out in force. They couldn't stop the original exploit. Unfortunately, they didn't make it in time, but they have been very vigilant at helping any of the protocols affected by this move forward. So thanks to them. If you're a white hat out there, 07 to you for helping. Not all heroes wear capes, obviously. So yeah, LPs are fine. The CRV curve ETH is, obviously, something that's very curious. But then we start seeing what we're calling, what was called, quote unquote, the death march. That starts here. So the CEO Curve, House Connoisseur, we'll call him, his online name is Mitch Will, I guess. And we track this on our Searchlight tool. He does have a large majority of the Curve supply. In fact, he holds it in multiple staked positions on Aave, on Inverse Finance, and Fraxlend. Well, guess what? As the price starts to tank, we start worrying that he is in a zone where he could get liquidated. At the time, it was what, 40 cents, Jangle? Where that was kind of the idea.
The liquidation threshold, it kind of changes based on the interest rates on his loans as well. They got kind of high, what he's paying off. But yeah, under 40 cents, things start to get real squirrely. 40 cent CRVs seems to be the threshold currently.
He did bring his own threshold down significantly for the
yes, he did. Yeah, he dropped him. It dropped to 19 cents. Something like that on July 30th.
Yeah, for a period of time, like I said, liquidation rates fluctuating. There's multiple money markets in question here. So, let me try to give a bird's eye view. I'll start a stopwatch on my watch so I don't go more than 2 minutes. But okay, basically, there's a 0-day bug in the smart contract language called Viper. Curve pools build a lot with Viper, and so there's a handful of curve pools affected. It's bad, but the scope was fairly limited, except for the CRV ETH pool, which rugged all the liquidity on chain for CRV. Now there's really very little liquidity on chain for CRV, and there's huge loans taken out on these lending platforms. So this puts Abracadabra, Fraxlend, and Aave at risk. What was the other one start with an I, Chris? I'm blanking.
Inverse Finance.
Inverse Finance. So those are the pools in question. And then the worry was, okay, if we start, if the attacker for the CRV ETH pool dumps the curve somewhere, it could wreck these positions and leave these lending platforms a lot of bad debt. Fraxlend, I learned, is actually very intelligently designed, but it has a functionality that dynamically calculates the interest rate on loans based on the utilization rate of the asset. And everybody was pulling out of the isolated pool lending Frax to CRV. So the interest rate on that was doing 1.5 to 1.9x in that range, like every 12 hours. And it was looking like that was going to continue. But then a bunch of whales stepped in and bought CRV over the counter from Mitch, from Egorov, from the Curve Dev. And that allowed him to pay down some debt. And it restored kind of confidence in the situation on chain for a period of time. That, it's kind of like the eye of the storm, right? So we've got the dire situation sort of behind us, seemingly, but these loans aren't all paid off. And these money markets are now in a situation where they kind of are at risk for bad debt, whether they always were at risk. They just are now all realizing it. It's becoming very real to them. So there's this MIM proposal, which
let's before we go too far forward. Let me grab.
So we're good.
Let me grab Mitch's wallet so we can so you can kind of see what we're talking about here. And this is on DBank.
So pull up the DBank real quick. I want to address some questions I'm seeing in the YouTube chat, like, is Curve a buy now? Is Aave safe now? A lot of people know, like, I CRV, CVX, these are some of my altcoin bags. I've always said, you mitigate your risk through conservative position size, especially on altcoins, right? So if they went to zero, it wouldn't affect my life at all, but I'm still holding them, right? That being said, there are short and medium term significant headwinds because now there's these OTC buyers that have some of the supply. Some of them have locked. I haven't confirmed all of them have locked on chain yet. There's still this liquidation issue kind of hovering over the head. There's a foot circling above the head of the CRV token. And it's going to be hard, I think, for CRV to go above 80 cents anytime too soon, right? And the path of least resistance over the next 3 months, maybe 6 months, in my eyes, the path of least resistance is down. That being said, if CRV makes it to the next market cycle, right, and the next kind of liquidity event, I think it'll be a strong performer, obviously. But its survival is not guaranteed. If it survives, which I think is probably above a 50% chance, all these issues long term, I think it'll do well, and this will be likely a good entry point. Not financial advice, but short to medium term, there are a lot of issues, and the path of least resistance is down, at least over the next few months in my eyes.
Yeah. So, what I mentioned, to some people is that to me, this was, and we were on this, by the way, we were on our Discord with our mastermind members at 1 a.m, watching this very closely, because ultimately, in my opinion, we literally watched an asteroid fly right in front of our faces, because in the event that he got liquidated, this is akin to huge hits. Obviously, LP is fine, but there's no rewards. That kind of not that renders Curve useless, but in the event that he gets liquidated on Fraxland, it then carries over to Aave, carries over to Inverse Finance. The Aave position in particular was a problem. His health rates are fine now, but they were quite a bit lower. The Fraxland one in particular was, I believe, at a 1.2, and that was one that people were worried about.
Yeah, he closed a lot of his Frax position. Sent 17 million Curve tokens to a secondary wallet, which he then did a batch send out from. So likely some kind of OTC deal there. If you look at the transaction history on this wallet right now, he's actually, as we speak, repaying his Aave loan.
Yeah, he's been an active boy in the last 24 to 48
he's improving the health ratio there as well, it looks like right now.
Yeah,
can we also briefly mention how he was trying to build his way out of this mess? He launched a pool. He launched a Curve pool with Curved USD and his Fraxland LP position. So one of the tokens was his LP token, his deposit position essentially on Frax. And one of the tokens was the Curve stablecoin. So he was able to, basically extract liquidity, and he juiced that pool. He incentivized that pool with his own CRV tokens, which is just, it's some people say it's brazen, but in my eyes, look, it's honest, right? Everybody knows what's happening. Everybody can see on the chain. Nobody's forced to provide him this temporary liquidity. It's purely like, hey, if you want to take this risk, here's a triple-digit APR for lending this guy your stable coins, and it might go to zero if it all explodes. But
the key is he opened this position with two other nearly $1 billion whales who came in and helped juice this position with him, taking the proceeds to go and then pay down the specific debts. I mean, we were watching this pool specifically because the utilization rate on it was almost at 100% for roughly 4 hours, I want to say, at least. And it became a real point of contention. It has since calmed down. It went down, I think, in the morning it was down to like 40%, which is great, which is what you wanted. But for him to create this pool was a very unique move. You could say it was big brained, but at the same time, he's in this is not the best position for him to be in. And, in the event that he gets liquidated for Curve, I mean, look at all this money that has to be accounted for. I mean, Aave would have taken a huge hit. It would have caused, the ripple effect of this would have just been unbelievably painful. Does it send BTC and ETH down to Goblin Town? We don't know, but it was enough that we had to sound the alarm and just watch this and see what was going on. Like as Jangle mentioned, it turns out that Justin Sun, the founder of the Tron blockchain, and apparently trying to become the patron saint of Curve, came through and OTC'd, roughly. No, that's not it. Roughly, what, 28 million? Got 50 million, right? 50 million USDT and USDC got funded through this OTC move.
I think he definitely pulled out somewhere around 40 to 50 million from Aave around this time. But I don't know how much he ended up spending to buy CRV over the counter. Again, it's kind of based on like a little bit of hearsay and tweets. We can see the CRV moving around on chain, but like I haven't mapped all the wallets to individuals yet. Or it's hard to know the price unless they're transferring stable coins as well.
Yeah, and looking at the comments here, this one is not far off from what people are thinking, because it was like who he sold this CRV to. And again, 11th hour kind of stuff, right? He sold some to Justin Sun, he sold some to DCF God, to Machi Big Brother, to Cream Finance, got a big piece of Curve. The oft exploited Curve Cream Finance. Roughly about 8 addresses got a significant amount of Curve. Some people were thinking this was institutional bailout. Nope, you got DGen Chad influencers who came in and bailed out Mitch. So this is where we're at.
It's important to note, like, there's a lot more Curve in circulation after this, and also there's not very much on-chain liquidity. So
right,
price
there has
manipulation
been another
of the Curve
pool
token itself is going to be easier.
Yeah, luckily Chainlink uses both on-chain and off-chain data feeds. So the centralized exchange liquidity is useful for these lending markets, right? Because like look at that wick down, right? If these lending markets were using purely on-chain oracles, it would have been curtains right there, right? But they're using Chainlink.
Which is what Vitalik wanted, right? Let's make that clear.
I don't know. I mean,
he advocates for on-chain oracles, right?
Yeah, I mean, I don't know how Vitalik personally feels about this. Sure. I think that it's a good point, that on-chain source of truth, less easily manipulatable. But I mean, I think that everybody acknowledges the nuance of the situation, which is like, okay, if you have a liquidity pool, the main liquidity pool on-chain gets hacked, then you have only on-chain oracles for your lending markets. That could be a systemic issue, right? So Chainlink is what most people use. It's by far the most popular Oracle network, and Chainlink is for better or for worse. In this case, I would argue for better. Is using a variety of data sources, which includes off-chain order book liquidity. And maybe there's a point in the future where we can purely operate on-chain, and there's like Lindy enough smart contracts with deep enough liquidity to like be able to provide those on-chain oracles. But or like doesn't look like we're there yet. Yeah,
I kind of feel icky about the whole Chainlink saving the day thing, but I think it is just a reality that I guess we're just not there, that we can just use LP TWAPs or TWAPs, whichever pronunciation you prefer, to handle it.
I mean, for me, it's like if I go and buy a bag of Curve right now, do I get a timeshare at his Australian mansion that Curve bought? That Curve, the house that Curve literally built, the Australian mansion.
Let's be honest. All these supply positions that Mitch has, where he supplied Curve on multiple different platforms and borrowed stables against it, that's just a way for him to monetize his position without having to actually sell the Curve tokens.
Correct.
So,
well, yeah,
if he still had all that money, it's a loan, so it's not taxable.
Like unethical, right? And this is kind of like, this is where yield comes from, right? If people aren't engaging in financial activity like taking leverage, swapping, that sort of thing, like DeFi doesn't exist, right? So it's like you can't. I don't like the argument like Mitch is doing these terrible things. But I mean, I get it, right? Because at this point, there's a lot of people who have a vested interest in DeFi not taking a major hit here, and like Ave having bad debt, who are probably in a position where they have to kind of help inject liquidity into Mitch's situation. But yeah, it's a reckless position, but it's DeFi. It's like permissionless. He was able to open it. The lending markets made the parameters open, and he took it. I don't think it's like an attack or anything like that.
Big takeaway to me, right, is like the problem is on the lending markets. There needs to be a valve for, in my mind, for looking at the available liquidity for a token. And I don't know, don't allow people to lend more of a token than the on-chain liquidity can support. At least if it's not like a whitelisted asset like Bitcoin, ETH, or USDC. Like there's got to be additional controls that can be put in here.
I think maybe you could have an additional control around, like, because right now all of these lending markets are quoting the Chainlink Oracle price for these assets, but it doesn't actually factor in the liquidity at all. So like maybe the answer lies somewhere in, okay, for assets that are not WBTC, ETH, maybe STETH or WSTETH, like these very liquid, relatively liquid compared to other things in DeFi markets. Like if it's not these tokens, there needs to be some mechanism where you factor in the on-chain liquidity and think, okay, if you were to market sell all of these tokens on-chain right now, which is what happens in a liquidation, how much Tether or USDC or ETH would you get? That's what this collateral position is worth, not the current trading price on Chainlink times the number of tokens, because we all know if you dump 30% of the supply, you're not going to get the current price. You're going to incur massive sort of price impact as you dump. And then therefore, that's how the lending markets get left with bad debt. So there either needs to be a restriction on long tail assets supported by lending markets, which is the easiest solution, especially in these sort of bear market conditions. But long term, when the bull market comes back and these lending markets are starting to compete for market share, and they're starting to want to get more brazen by adding more collateral assets because token prices only go up, like they got to remember this moment right now where, in 2021, 2022, early 2022, if you were like, yeah, we're adding Curve as a collateral asset on Aave, people are like, yeah, that's fine. Curve's huge, but now it's an issue, right? So because of this position.
Well, then he owns more than half the tokens.
I think of the circulating supply, yes, but you got to remember a lot of CRV is locked because of the VE mechanism.
Fair enough. No, that's a good point. But, had he not had that, maybe he wouldn't have been able to make the moves he made. So, obviously we're watching this. This is all very interesting. That kind of leads into what Django was talking about earlier, which is Abracadabra, where one of those positions is enacting, new rules on some of these cauldrons that, flexing that interest rate to a more variable interest rate based on the total collateral ratio. I don't think I love this idea. Obviously, they're going to have, who knows if it passes? Maybe it does. But at the same time, it's like taking out a loan and then someone changes the rates midway through. Ultimately, I guess that is what it is. But at the same time, trying to prevent something like this from happening again. Start with you, Gabe. Any thoughts on this particular proposal?
Not that many. I honestly haven't touched Abracadabra in a long time now. Yeah, it's an interesting proposal. It'll be interesting to see if it actually gets passed.
What about you, Django? I know you had thoughts.
Yeah, so as far as my exposure to MIM, I have none. I haven't touched it really since that whole Danny Sifu thing exploded, right? I lost a lot of faith in the project because there are a lot of like proxy contracts and upgradability and adjustable parameters and like configuration points in the protocol. And when I combined that with the whole Sifu thing and not trusting Danny or that team necessarily anymore, it caused me to move away from the project and the stablecoin entirely at that point. And here, we're seeing, depending on your perspective, the upgradable parameters of this system protect MIM, the stablecoin, right, and be bad for the people who are, in this case, Mitch, opening positions on this platform, right? So they have at odds incentive mechanisms, right? Mitch's incentive is to take out a loan and not get liquidated. And their MIM's position, the Abracadabra's position, their incentive is to protect from bad debt at all costs. So in order to protect from bad debt, it's counterintuitive, but they kind of want to be the first one out the door, right? If they are the first one to liquidate Mitch, yes, the whole system, it blows up, right? Ave's left holding the bag, maybe Frax is left holding the bag, but not MIM because they were first, right? Because they ratcheted up the interest rate and they were able to trigger the liquidation before anyone else. So any on-chain liquidity they get to dump into first. I think that's the thought process here. And so it also makes them a priority for being paid back, right? So it forces Mitch's hand to pay them back first, which is probably what's going to happen if this governance proposal passes, because effectively what it does is ratchet up the interest rate on Mitch's position very rapidly.
So with that said, obviously he's done a round of fundraising, I guess, if you want to call it that. Do you think he has to go do another one?
I was hoping he would offer up some Airbnb experiences in his Australian mansion. I would pay for a room there and help maybe give.
As would I. He's got an impressive mullet, so I'd like to compare mine to his, for sure.
How's housing prices doing in Australia? I don't really know.
I don't know. Do we have any Australians in the crowd? Let us know how that's going. Would love to know. Yeah. So for me, that's really the part that's interesting, is if this passes, what is, obviously he's going to have to look at that Abracadabra position, because I think he cooked 2.5 million, I think is what we tracked on Searchlight for Abra. So that's going to be very interesting. I mean, making your money work for you. That's the DeFi way, right?
So is he locked in on his position and they're trying to change his base APR so that he's paying insane fees and he can't do anything about it?
Yeah, pretty much, I think. I mean, I would like to think that lending is immutable in that case, but maybe it's not.
Yeah, it basically there are adjustable parameters, and this varies from money market to money market, but like Aave also has some adjustable like configuration points as well. But yeah, I think it seems like they're trying to maximize chances of full principal recovery, and so basically increasing the base interest rate based on how much is borrowed, and then increasing the interest rate multiplier as the collateral ratio gets worse, right? So that's the goal, is to basically, I think, one, ratchet up the interest so he's forced to pay it back quickly. And then obviously, like, as he's paying it back, interest is accumulating. So like, even if he doesn't pay back the whole thing, ends up getting liquidated and they can't get all the value. Like if the interest rate was like, going bananas during that time, like maybe they're not left with as much bad debt.
Well, I think it's interesting. Here's the snapshot page for it. There, it's 3-1 on the no, which I don't know if somebody is juicing some spell there to vote on this due to the quick nature. They went ahead and opened it up. It's open for another roughly 12 hours, less than 12 hours. So of course this could flip flop, but it looks like the majority of people are saying no to this, which I find very interesting.
You never know. You never know how these votes are going to go at the last minute. Like you could do a little bit of on-chain analysis. Like 14 billion spell has already voted. How much more spell is out there? How many more like major holders are there left who haven't voted? Don't know. Haven't done any of that research, but it's hard to spell. There's a lot of spell tokens out there. So I don't know what exactly the circulating supply is. Here's two reasons why I think you might vote no if you're a holder. in this situation. Number one, the holders, the token holders, are not necessarily the lenders on the Abracadabra-like platform, right? So they're not exactly the same type of stakeholder, but they are mostly aligned that they want the platform to not have bad debt. And it also like it's not good for the reputation of the protocol to like not rug a position, but like change the parameters on a position that is very old in order to protect the protocol at the expense of the user of the protocol. So it's not a good reputational thing. It would make me afraid to use Abracadabra with size, like for on top of the reasons I already have for that. And it's kind of the reason why I've stayed away from Abracadabra is something like this could happen. And then also like a lot of spell holders might also be CRV holders, right? They might also be CVX holders. A lot of the DeFi whales that, might be involved in something like MIM could also very well be involved in something like Curve in the Curve ecosystem. So that is also a possibility here.
Yeah, that was going to be my point. I figured that a lot of the people that are, voting here are most likely, Curve and CVX holders specifically. So, yeah, this is what a week.
There's just not a lot of on-chain liquidity for things like in general.
That's the problem too, right? There's just not a lot of deep liquidity anywhere, specifically right now for Curve. So
like Pepe is the number 7th largest liquidity pool on ETH.
Is it really?
Across everything?
Oh, yay. Man.
Well, that is I am sad.
That's pretty funny. That's really actually pretty funny.
Where's Hams? Where's our hamster racing token? Where's that sitting? I guess
at least there's real hamsters there.
The
streams are pre-recorded, the races are pre-recorded, but they say so openly and honestly in the white paper. Pepe, I prefer the hamsters. I don't know.
Just going back to the vote for a second, it'd be interesting to see if some Curve slides Danny's way. Exactly who's voting with those spell tokens.
I'll bet Sifu has a whole bunch.
It's all the same, man. This is like the insider cabal, the
plutocracy,
the smoke-filled back rooms with the whales and the devs, and it's all so tiresome. But hey, at least we got 15 people in the stream, 8 likes though. We can do better. Juice that like button for smoke-filled back rooms with Danny and Mitch.
And if you're watching us on Twitch, hello to you on Twitch. Please give us a follow. Love to grow our followings. Maybe we can incentivize some things, if you know what I'm saying. Drop a suggestion. All right. We'll go ahead and move on. So, I'd like to get in the chat. Give me a 1 if you know what Base is. The L2 for Coinbase, which is built on top of the Optimism stack. They came. We've talked about on this call. They opened it up to developers on July 13th. General admission, I guess, to Base is going to be sometime this month. Hasn't quite happened, although it's probably open now, I suppose. With that said, multiple degens have found their way onto the mainnet because the only real way to bridge currently, up until this morning, was to literally send ETH to a contract address, and it just showed up on that same wallet that you sent it from on Base. It's caused a lot of meme coin and degeneracy. Someone has likened Base to a nicer version of KuCoin, or KuCoin's community chain, the KCC, the original Rug City. Ultimately, this is where we're at. So Base should be up and running for most people now. Why? Because Synapse has opened the doors. I should probably put that on screen, but the issue right now is that slippage. Gabe, you said slippage was a little out of hand right now, but obviously that's to be expected there might be some ARB opportunities for anybody who might be wanting to look to ARB.
Yeah, that was last night. If you try and bridge 1 ETH to out of base now to Ethereum mainnet, you're looking at 97%. So about 3% slippage.
All right.
And like
Yeah,
1% ARB if you're bridging into base from ETH mainnet.
Yeah, the other issue was the other issue up until yesterday or this morning now is that you couldn't actually bridge out of base. So a lot of the rugs that were happening, they had nowhere to go. I take that back. The only real way is to actually go through the official ways, like if you went back to Arbitrum, for example, and you have to wait the 7 days for settlement. So that is a thing. So at Synapse, synapseprotocol.com, you can bridge from, let's say, Arbitrum to base using ETH. Let me see if it'll let me. Okay, positive slippage on base then. Last night it was so the pools are deepening. There are pools for base available to bridge at, but the SYN token, ladies and gentlemen. So I don't know if you necessarily want to do that, but we do now have not an official bridge from base, but we do actually. I guess I should check. I believe that
and this is positive slippage.
Yep.
Bridging into base, yeah, it's negative.
Yeah, I imagine.
Nope, that's not the right one. I'll find the domain in a little bit.
They should probably buy that domain. Buildonbase.org. I mean, they're like a $20 billion company. They should probably be buying that domain.
Well, yeah. Well, so the big story from this is that there are multiple well-known degens building. For example, Forgiving, if is out there, if you know his story, he created Tomb with a 2 as a 15-year-old, and just shot up as a ridiculous influencer. He has a Tomb fork there called Base Ethereum, which is pegged to ETH, that I was looking at. Aerodrome, which is a fork of Velodrome on Optimism, is on base. That'll probably be the big DEX. Leet Swap, which was a major DEX trying to get off, they rugged LP wise. And then the big meme coin, the shit coin that was available there was BALD, BALD, which of course I guess is a nod to Brian Armstrong, the CEO of Base. It took off, made some huge hype. Honestly, probably won't see another coin like that, with the same hype and movement. There could be more, who knows? But now that this bridge is here, the degeneracy is going to be off the charts. So I'd probably wait a little bit to bridge over to base unless you were really curious about looking around. But I did alert our Discord back around midnight about the Synapse bridge being open. So it's out there if you want to check it out. There are some things being built. There are some launches that we will be looking into moving forward. So Bald rugged, which was unfortunate.
Bald rugged.
Yes.
Bald rugged.
Bald rugged.
What do you get? 500, 600 ETH, something like that?
Yeah, a lot of money.
It got up to, I think, over 100 million market cap at one point. This was at the same time as the curve thing was happening.
Yes.
So I don't know if I love or hate this industry, but I do know that not a day goes by where I'm not thoroughly entertained. My attention is firmly fixed on all of this nonsense at all times. And, take it or leave it, I guess.
Well, so the tinfoil hats are strong with this one, mainly because there are rumors, and I take that back. Igor here, the researcher, they can tie it to an Alameda account that was only the deployer was active sometime last summer because it was tied to an Oasis account or something like that. But the question is, which Alameda employee is behind the deployer? People are saying it's Sam, but Igor's argument is that it's not Sam Bankman-Fried, it's Sam Trabucco, the ex-CEO who left before things really hit the fan.
Did he ever get charged with anything? Has he been charged with
No.
anything yet?
No, he did not.
What a bastard.
Yeah. I have a special lack of love in my heart for Alameda just because I've been left in the wake by a lot of their whale shark sucking vampire attacks across half of DeFi, Polygon, Avalanche, Phantom.
I mean, this is the Solana playbook, right? This was
It absolutely is.
like taking a page out of like every single Solana altcoin, pretty much. Not, I mean, maybe not every single one. That's probably not, but you know what I mean.
Yeah.
How could he mess up so bad to use a wallet that can be tracked back to something like this? Like, it just doesn't make any sense.
Well, I'm glad you mentioned that, Gabe.
Yeah, go.
No, Chris is gonna get it. He's gonna hit it.
Go ahead. It's so crazy.
It's a Fed plan, bro. They're Fed plans. They're sent to discredit the industry. Of course, this happens on base chain, right? Coinbase is L2, the most legitimate actor in this space, right? They SBF is on house arrest, or Trabuco is getting off with no charges. Whether it's SBF or Trabuco, whichever Sam it is, they're causing havoc on the regulator-friendly KYC chain with their doxed addresses, right? So that Gary and Janet Yellen and whoever, deep state Fed boy can go and say, hey, look at the degeneracy that's happening on these permissionless blockchains, even when Coinbase is doing it, right? They claim to be such an ethical and compliant actor, but known criminals are straight up rugging the public on these chains, right? With brazen disregard for even the law or being caught, right? Like, that's what DeFi, that's what crypto is, right? That's the easiest narrative to spin up to Congress if you have a doxed SBF address literally rugging a 9-figure meme coin called Bald on Coinbase chain. Like, he's a Fed plant, bro. It's a Fed plant. There's no. Do I believe that? I don't know. That's the argument, though. That's the tinfoil hat argument.
I mean, they can't really be this bad, right? This account was one of the early voters on sushi governance. Of course, they were going to tie it back to whomever owned this account. So it's like,
greed and stupidity are much easier explanations, but yeah.
No, it's not. It's so stupid.
Is this confirmed KYC Coinbase stocks?
Which one?
The rugger.
The ball deployer?
Yeah.
I think what's confirmed is the ball deployer has contributed towards the UST DPEG, has voted early and often on many sushi proposals going back to a very old time period, which we know kind of aligns with SBF and Alameda, has interacted, like it says here, heavily interacted with Alameda and blacklisted Tether addresses. So like they are, a sophisticated actor in the space with long ties to Alameda and the sushi team. So if it's not SBF, it's like SBF adjacent, right? It's kind of in that inner circle of early Alameda. Goons, I guess is the way you'd say.
I'm going to go with dumb is more likely than Fed plant. I mean, one thing that we learned from the whole FTX disaster is that those guys were actually not that smart. Apparently they were guys, they had a signal chat called wire fraud.
Yeah,
they were running a multi-billion-dollar company or $1 billion company or however much it was worth off of QuickBooks and approving expenses with Slack emojis. So let's not overestimate their intelligence. Like that FTX was apparently, smoke and mirrors. So that is what it is.
Andrew, don't we use QuickBooks?
It's
I
fine.
really didn't want you to bring that up.
Last I checked, we weren't a $1 billion company. Like we are a small group. It's acceptable for small businesses to use QuickBooks, not multi-million or $1 billion ones.
We're now
Deploying
accepting
more
sponsorships
QuickBooks.
for our bookkeeping. If you know anybody.
We also, it seems like we have a slightly more rigorous expense process and financial controls than FTX does. So that's saying something.
Well, certainly our amphetamine budget is smaller,
Oh my god.
but it's
Stop
because
it.
we've got a guy. No, I'm joking. That's a joke, people.
I have
No, it's a
children who are
joke
going to
on
watch
the
this.
Oh, I don't know.
Hey, these days most of the kids are on. Never mind. Okay,
Never mind.
we'll move on.
Move on. Move on. So it's almost like it was timed, right? Because no one really gave a shit about Curve because this was going on and then this was going on. The SEC is suing Richard Hart. Richard Hart for using investor money to buy lavish gifts and just various other things. Exorbitant luxury. Man, let me find a picture of him wearing that stupid
Dude, the Gucci
pattern.
suit. Please pull up the
Oh
Gucci suit.
God. Right there. Oh no.
There's so many. He's got a dozen of these designer ugly as hell tracksuits. It's just unbelievable. What a
Yeah,
statement.
you guys know that meme where there's like two buttons and the guy's reaching for one of the buttons, they're like both bad options and he's sweating?
Yeah.
Yes, you
No.
do.
Yeah,
Yeah.
probably.
Yes,
That
I was
is
just
what I
responding.
feel. I feel like Jangle is that man in the meme, and there's like a button that says, support literally anything that the SEC does, and the other one is like defend Richard Hart, and there's no good option.
Yeah. I mean, guys.
Look at the yearly for this, please.
Yeah.
Okay, so people don't like him getting sued, it looks like.
Well,
Yeah. What's nuts is the FDV is still between Pulse Chain, between PLS and Hex, is still greater than like Arbitrum. It's still greater than Optimism. What? How?
I don't know. I mean, if we look at this lovely
Zero.
we look at the boring sleuth expose. I'm glad his last name isn't Hart, I guess. It's just interesting. But yeah. I mean, ultimately you find if you have a chance to read this, I'll put it in the chat. Why not? Yeah, just everything he's done here. If this is all true, essentially Sybil attacking his own chain, farming with thousands of wallets of Hex and Pulse to try and make money off of all of his followers with his own wallets. He's buried really deep into because I guess he's pretty good in with CZ from Binance. And
I have no reason to believe this isn't true.
Yeah, I know. Isn't that the craziest part?
I thought the spoofing of wallets to pump the number of addresses holding Hex was like a known fact. Like Eric Wall's been talking about all this stuff on Twitter and like citing chain sources for like ever. And I mean, let's be real, like the Hex marketing strategies, like they were sending people they were doing mail advertisements, right? Like they were sending massive amounts of physical mail to people's doorsteps about like buy Hex, stake it for a guaranteed 30, 40, 50, whatever percent APY. Like it's an internet bond. Like they were saying all that shit. And, it's just like it's a grift that's been around for as long as the industry, for too long in this industry. Right. And so I'm really glad to see some enforcement action. As much as I love the permissionless and open nature of the internet and the permissionless and open nature of distributed systems. And yeah, I mean, Pulse Chain wasn't like decentralized in that, Hart practically had, admin keys to bridges and ridiculous amounts of the circulating supply, et cetera. But, I still think that there is room to have a permissionless open ethos in this industry. And also people who are like blatant charlatans and scammers should be like prosecuted in the jurisdiction that they reside in based on existing laws of that jurisdiction for like fraud, right? So I still believe in the rule of law and open permissionless networks, and I don't believe those two things are mutually exclusive.
I just
I don't know what like the minimums are and like what exactly his charges are, but like how long in like a totally just and fair world based on just the information that we know at a high level and just our experience like seeing Hex over the years, like what would you think is like a fair punishment that would like not be too harsh, but would like adequately deter people like this doing things like this in the future?
Not gonna lie, that's some strong drip, but no.
I think the suit itself is criminal.
Yeah.
Yeah, he should go to jail for that picture alone.
Oh no. Skull
So
emoji.
I think my issue here is like, on one hand, I think it kind of seems like he's a fraudster and he should probably go to jail, or at least he should have his day in court with a jury of his peers to determine whether he should. And it isn't for me to pass judgment because I think that's what we have laws for. On the other side, I feel like the SEC is trying to make an example of all of crypto with things like this by like highlighting the worst dudes. And I don't love that because there are plenty of fraudsters and criminals in TradFi. And if you go back and look at 2008, 2010 timeframe, I wanted some of those guys to go to jail.
Facts.
And they didn't. So if there's a double standard for crypto, I'm kind of torn.
Well, you know, they do prosecute fraudsters in traditional markets as well. Maybe you get big enough and they won't. But, you know, there was a podcast that somebody I actually went to high school with had created a podcast and ran the podcast for several years. And just like over the years, they started like endorsing a lot of penny stocks on the podcast. And turns out they were buying before they talked about it. They were saying that this penny stock's the next best thing. And then that was causing a manipulation of the price. They were selling into their audience's exit liquidity, right? And they were doing that for like a year or two, allegedly, right? And they were prosecuted by the SEC, right? And it was not crypto related at all. But it was, you know, alleged criminal activity. I don't know if they've pled guilty or if the case is going on, but right. So like things like that. I think the SEC, if they focus on people like Richard Hart or like penny stock pump and dumpers, right? That's actually their job. In my eyes, that's actually their job. Going after Coinbase to me is a waste of time. Going after Richard Hart is like probably the most effective use of time I've ever personally observed the SEC. It's like the most worthwhile, low-hanging fruit type of pursuit that I've seen the SEC engage with in a while.
Anyone who made the sacrifice, I feel for you because I don't know how much longer this goes. Honestly, we have a couple members in our in the group who are supporters, and they, at least to my knowledge, have gotten out. So obviously, not financial advice, do your own research. But yeah, this is not a good day for them, and we'll see where this goes. Moving on to the last thing before we head home today. This is actually pretty big news that we probably need to talk about, and that is U.S. credit rating dropping from AAA down to AA+. Let's kind of talk about the whole point of how this happened. Gabe, we'll start with you. If you're going to want to give some timeline as to why, because I know you said it's about time this happened, but to kind of give some context as to why we've been waiting for this.
Yeah, I mean, I think it probably should have happened leading up to the whole debate about the debt ceiling in the US. And I think the fact that they went through and essentially removed the debt ceiling for the next 2 years, or at least paused it, is likely the largest contributing factor to this downgrade. I haven't had a chance to really dig into it to this specifically yet, but we've been talking about the U.S. economy a lot on our weekly calls, the macro calls specifically, and just the runaway debt and interest repayments from the U.S. government is getting concerning. Yeah.
Jangle?
So sorry if you hear any background noise. What is when you decrease the credit rating of like the global reserve currency issuer, are you basically saying that the likelihood of a like honest default, like treasury holders not getting their interest payments is higher? Because like I view that as like a really low probability event, especially considering the debt ceiling is like non-existent until 2025. But I do view like the structural devaluation of the currency as like an inevitable thing, right? Just like a fact of life. Like the sun rises in the east, it sets in the west. Like the dollar is systemically devalued over time. Um, the sky is blue, Pope's Catholic, all those things, right? So like, does that warrant a downgrade? If so, then like, why isn't it like a C or whatever's low? You know? I'm just trying to understand like which mechanism is it saying is like is it's measuring, right?
I mean, my understanding is it's like a consumer credit score. It's just an institutional credit score. And there's different rating buckets, and it is looking at a probabilistic perspective on the risk of default, shorter payments. I'm sure Gabe would know better. But like this is also it's a change from a AAA, which is the best, to the second best. So it's like a small step down, but it's still pretty significant. It's a significant signal. But ultimately it can't be, I don't think it can really be taken as anything other than an indication of at least a marginal decrease in confidence over a government's ability to pay its debts.
Yeah, and I personally have no doubt that or at least until 2025, right? No doubt that the U.S. government will continue to pay bondholders. But the real question is the nominal versus real interest rate. Like, our bondholders going to continue to get a real return over the coming years and decades? And my thought for that is certainly not AA, right? Like a very low probability over a 5+ year time horizon in my eyes that bondholders are getting real positive yields in general, right? But the probability of like them getting no money, right? Like them not getting their dollars, I think that's low, right? Because they did with a consumer credit score, or like consumers can't issue the denominator of their debt, right? The government, in a roundabout way, can, right?
So let me quote some things that Fitch themselves has said in relation to this. So the rating downgrade of the United States reflects the expected fiscal deterioration over the next 3 years, a high and growing general government debt burden, and the erosion of governance. In Fitch's view, there's been a steady deterioration in standards of governance over the last 20 years, including on fiscal and debt matters, notwithstanding the June bipartisan agreement to suspend the debt limit until January 2025. So those are like the biggest factors that made them lower the rating.
Yeah, makes sense.
So bullish for crypto? That's the other question.
Yeah, I think long term, yeah, it's bullish for all risk assets for currency to be devalued, which it seems like this is sort of an indicator of their opinion that will happen in the future, right?
Yeah.
Yeah.
What a week, right? What a week. All right. Anything else you want to plug, Jangle, before we head home?
Well, we got, let's see, how many people in the stream? We got 14 people in here, 10 likes. So make sure you drop a like. Make sure you subscribe. We're here every single Wednesday, same time, same day. If you look in our comments or description, we'll add our Beat the Banks free group where you can come and hang out and ask us questions more directly. But you can always drop a comment down below and I will reply personally. So thanks for coming, everybody. Appreciate you all. See you next week.
We'll see you guys later. Have a great day. 07.